So the highlight today was all about this crude news with President Trump speaking to the Saudi prince and reducing production, kind of eliminating these price wars between Saudi Arabia and Russia. Let me go back real quick. About a month ago, Saudi Arabia and Russia were trying to decrease production. Russia didn't want to. So they knew demand was going to zero amid this crisis, and they were trying to decrease production. And Russia didn't want to do it. So Saudi Arabia on March 9th, that weekend, said, okay, gave him the middle finger. Said, we're going to increase production. How do you like that? So you open up 25% lower that weekend, that Sunday night in oil, and that was real hurtful to the stock market. And it is because the correlation that oil has to the energy sector, and the energy sector has to the broader indexes. So when you see a tech sector rally a bunch, the whole index is probably going to rally. Energy sector has that effect because it's one of the top 2 or 3 weighted indexes of the entire index, or sector of the entire index. So if oil affects energy sector and energy sector affects the S&Ps, and you trade the S&Ps, you need to know what crude oil is doing. We have a dial of crude oil up here in the upper left to show you a little faster what oil might be doing. And then we pulled up a chart and showed it because it was becoming more of a driver when this news began to hit the wire around 9:30 Central. You got to know that and put yourself in front of, as New York is going over their numbers here, 10% versus 10%. So the market's not getting good news. It's not getting bad news, but it wants the good news. They'd like to see a plus 5%. It's holding steady. Now I'm writing these things down. It's the last few days, plus 14, plus 12, plus 14, plus 10, plus 10. The last 5 days, as New York just reported. So the market's a little softer on not getting good news. So going back to energy, it's going to affect the overall index. And that's why when there's big moves in crude oil, it'll pull the overall stock market with it. Now, what's important about this is not just how it drove the market today and how there was at least opportunity or less randomness had you paid attention to oil like we did as either a leader or to keep you comfortable long or short. But also it's important to keep an eye on this as a driver going forward. Saudi has called for an immediate OPEC plus meeting. Do they meet? Does Russia agree? Does Russia cut? Do they cut 10? Do they cut 15 each? So all of it is great. You got 20% higher prices in oil. When I say great, stabilization is what the market wants. It doesn't want $50 oil. It wants supply to meet demand, and right now it's not. There's too much supply out there, and that's what created the price war, and it's creating the instability which markets – it's the last thing the markets need. This in and of itself doesn't make it hip, hip, hooray, we could rally 5,000 Dow points. It's just one less thing to destabilize the energy market and one thing out of the way. You still need the health of people to turn the corner before you worry about the wealth of people. And the health right now, the hurricane is swirling over us. You just trying to eliminate the damage that is being caused, and stabilizing oil prices could be one thing out of the way. But Italy's numbers, New York numbers have been coming anywhere between like 10 and noon, and they reported as we're doing this highlight. The numbers out of Italy have been coming in around a little after 11 o'clock. So within a half an hour, they've been coming in. And the market wants to start seeing not the same numbers as the day before. They want to start seeing lower numbers. So when these numbers come out in New York and in Italy, and stuff, they want to start seeing plus 5% in New York or out of New York, plus 2%. And I'll leave this highlight with the last 4 numbers out of Italy was plus 5.5%, plus 4, plus 4, plus 4.5. And that was a drop out of last Thursday, Friday. So they're peaking and maybe downturning a little bit. So they want to continue to see that. And there will be knee-jerk reactions to the market when these numbers come out. And you could tell from that reaction when they got softer, now I know what the market's looking for. They're not going to look for they're certainly not going to like a bump in the percentage increase, but they don't even like sideways. They want to see +8, +7, +5% coming out of New York.